Very welcome, Paul and Martin.
Thank you.
Thanks, Leigh.
Martin, first up for you, for the entrant pharmacists in the room, can you provide a brief overview of the Irish wholesale market?
Yeah, no problem, Leigh. So look, at a very top level, you have two key players in the market. That's ourselves and Uniphar, and you have United Drug that Paul heads up. We're both vertically integrated. So what I mean by that is we both have a pre-wholesale business where we bulk store pallets for manufacturers, and we each are each other's largest customer. We then have a wholesale business where we supply hospitals and a chain of retail pharmacies, and then we also own and operate a chain of retail pharmacies ourselves. Between the two of us, we supply roughly 90% of all medication that's taken by patients in Ireland. So look, we're a very vital and important part of the national healthcare infrastructure. So the whole wholesaling, it's a very complex model in the pharmaceutical industry. So it's not like your typical model where wholesalers are selling pallets. We actually sell everything in single pack units. So you can kind of imagine what that does to your cost base. It's a high volume industry, but it's extremely low margin. Huge levels of working capital tied up in stock. You're dealing with high fixed costs, and your margin for error is really very small in terms of making a profit as a wholesaler. So I suppose that's the reason there are only two wholesalers left in the Irish market. We deal with 250 manufacturers. We have 1,900 retail pharmacies that we supply to nearly 11 times a week. There's about 200 hospitals that we supply to 3 times a day. We carry a core range of 13,000 SKUs. So there's a lot going on in that space. Busy, very busy. I suppose just to give you an example of how good the service is that we provide. So if you're a pharmacy that's one of our primary customers and you order with us in the morning, we'll have it with you after lunch. So like I don't think there's any other industry that I've ever heard that can offer that kind of service out to customers and patients. So there's a lot of work goes into it. There's huge teams in the background here keeping the supply chain going. We operate 24/7. There's no let off. There's no days that we're closed. So it's a very full-on industry to service our customers' needs.
And Paul, what advice would you provide for any entrant pharmacist in the room regarding purchasing medicines?
Purchasing medicines, I guess, well, as Martin says, there's two main suppliers of medicines, broadly speaking. So you do your deals with the two suppliers, possibly consider joining a buying group, and there's one on either side of the house. But I think the bigger picture is more about understanding your assortment and the products and the range that you carry, managing your stock holding in store, and keeping it as low and as tight as possible. Because ultimately, at the end of the day, you run your business on margins or on theoretical margins, and when you do your stocks or stock takes at the end of the year, that margin can quickly, some of it can evaporate or erode or wash its way through, so you have to be very careful. So in short, it's about 65-70% is RX in the back of your dispensary, front of shop. Be very careful there. And the other piece of advice is the sooner you could move to livestock to be able to manage your stocks on store is critically important, because you don't want to do is work all your year through and find out that either through theft or shrinkage or otherwise you find out that your theoretical level of profitability isn't there. It will be hugely disappointing.
I suppose, as you said, you can both deliver twice a day, so there's no need to hold a huge amount of dispensary stock.
There isn't. So in theory, I see it with our own chain in McCabe's Pharmacy now, as we call ourselves, where in theory you're saying you should have stock levels as low as possible. It's no more than wholesaling. This is ideological. It's not as easy as it sounds. It gets more and more complicated, but I would say put time and effort and focus into managing your stocks.
And Martin, with the increased emphasis on sustainability, how are you integrating environmentally friendly practices into your supply chain and distribution process?
Well, sustainability is very much at the core of everything we do. So each of our divisions have teams that are dedicated to this, and they're constantly looking at how we reduce our carbon footprint as a business. So just to give you some of the big ticket items, in 2023, we recycled over 82% of all waste and packaging that we had in the business. So look, that's a feat in itself. In the coming months, our transport partners, so they're going to be transitioning away from your traditional diesel methods of operating trucks into the HVO. So for anyone that doesn't understand what that is, it's hydrated vegetable oil. So the emissions coming from that when you're powering a truck is 90% less than diesel. So that's going to have a massive benefit. And then one of the big ticket items that we have is in 2026, we have a brand new warehouse coming online in Greenogue. It's going to offer us twice the capacity of what we currently have, but also it's going to significantly reduce our footprint. So we have a lot more environmentally, I suppose, renewable energy power in the building. We're going to be looking at solar, etc. So whilst you're increasing your capacity out, you're also reducing your footprint in terms of how we're going to operate the business through automation, etc.
Paul, I suppose the same question to yourselves in United Drug.
Yeah, it's similar. I will start off by send back some of the totes we send out. It helps recycle, but that's just been a bit of humour. What I would say is that we've looked at, and this is probably, I'm thinking of a new owner-operator, so we're looking at areas where you can drive lean and become more efficient around the environment that brings benefit to your P&L, and I think one of your previous speakers explained that. So that's doing elements that don't require CapEx or OpEx, they don't require money, it's just behaviours. And then secondly, we moved into where you're investing in systems and ways of working that drive sustainability. So for example, route optimization, set points in our fridges and freezers, give it a range rather than a specific point so that it's not turning on and off, solar panels, and there's a number of things where you can spend CapEx or invest money and get a 3 to 4 year payback, which makes good business sense and good for a new owner-operator.
And I suppose, Paul, how have the recent stock shortages affected your supply chain?
I don't know where to begin with this one. It's been a nightmare post-COVID, I would say. The root of it, I think there was an issue with supply chains and manufacturing and availability of medicines. But from a day-to-day, both as a retailer and as a supplier into the retail channel, it's been really painful. So we've now got hundreds of products on allocation, which means it's a feast or famine. We've the regulators crawling all over us to make sure that we're doing an equitable supply out to the sector. But it's been very expensive, very frustrating. And I say, listen to retailers, it almost feels like if patients are becoming more accepting of the fact that their medicines aren't available the day they come in and they get part supply or short supply. So it hasn't improved a huge amount. You'll hear the rhetoric that it's improving. I can see that in our case, we track what we order versus what we receive. There's been a modest improvement, but you're still talking about the last quarter where 70% of the packs that we order from manufacturers on the inbound side, that's what we receive. So we're ordering 100 and we're receiving about 70. So it was as low as 62% come back last winter, 12 months. But while it has improved, we're by no means back to where we were, where it used to be about 85 to 90%.
I suppose, Martin, it's the same on your side of the house.
Yeah, I'd echo what Paul says. I suppose, look, it's very difficult. As of yesterday, you've nearly 300 products listed on the HPRI website as key shortages. So I suppose there's a lot that happens behind that. And I suppose we've teams working in the background. We've huge teams trying to predict where the demand is going. So I suppose there's a lot of close calibration with the suppliers in terms of what's coming in, what's going out, what's the demand going to move over to. So I suppose you've got the planners in the background, almost a little crystal ball, trying to see right where is the demand going to go, to what manufacturer is going to get this volume if something goes out. And then I suppose just in terms of the pure supply chain itself, there's huge issues with products when they come back into stock. So if you think some of your key medicines, they've come back in, you get a huge run on it. So that puts huge pressure on the supply chains, the warehouses, and I suppose we're not set up for that. We're set up for a certain level of volume. The volume is quite high that we do, and then when we see a back in stock, if you want to call it that, and you see a surge in demand, that takes a lot of managing as well, because effectively you're trying not to bring down the supply chain. It's all about smoothing the volume, Leigh, to where we are, and I suppose you're trying to, we've small delivery windows. We promise a customer we'll be there at 11. We try to be there at 11. If we get a delay in the warehouse off the back of, a surge, it's felt the whole way down through the supply chain to the pharmacist and then to the end customer.
Very good. Say, Martin, how is the state's payment structure affecting the market and supply chain?
Yeah, well, it's a very complex structure that we have here. So Ireland's a very small market, and we're very low volume when you compare us to some of our European neighbours. So typically what happens with the manufacturers is the key supply chain and commercial decisions are being made by European teams. So I suppose when you have a European team looking at it with their commercial hat on, they say, all right, where can I get the most for my product? They're looking at Ireland where they're being reimbursed less. It doesn't take rocket science to see that product might be diverted into another country where they're going to make more money. And ultimately, like for the manufacturers, it needs to be economically viable for the products to be sold in Ireland. And there's probably a question to be asked: has it gone a little bit too far in terms of the reductions that we've been seeing? Because I think it's definitely having a knock-on impact into supply.
And do you see any change in government policy in that respect?
I think it's something that needs to be looked at, Leigh, to be honest with you. I think as we continue to see continue to see suppliers not being able to provide us with the stock, I think we kind of need to sit down jointly, government, manufacturer, and the wholesaler in the room, and I suppose just have an open and frank discussion about where we're going and where the future this is going to end up.
And Paul, I suppose, where do you see the future of the Irish wholesale market?
Well, I think the market overall, I'm just conscious, the audience in the sense that it's new owners. So the retail pharmacy market is a strong market. It's grown year on year. We can see RX has grown year on year. So for both retail and supply chain partners, the sector is healthy and it is going to grow. So we can definitely see that. The only pressure point that's there at the moment is around front of shop sales or consumer spending. You can definitely see, and I can see it in our stats, that there's a definite tightening up there in the last 3-4 months. With respect to the future of wholesaling, I would say data and analytics, believe it or not, robotics and ChatGPT and AI, those methods being used. And if you think about our algorithms and how we do them, we've started to deploy that in Germany as an example. I think you're going to see systems being used more to enable a more frictionless engagement between wholesale and retail. And I see even, I'm talking about the Phoenix Group, where in Portugal as an example, they have done ways of working with retailers to say, we'll manage the ordering and fulfillment of your product. So we can see what you're ordering every day. We can see your patterns. So we will, package up a recommended order and say, this is what you should order. You press a confirm button and it sends the stock out. What it does for the retailer is that you don't have to be concerned about how to order, when to order, the frequency of order, and did you capture everything? And the supply chain partner will coordinate that on your behalf. And back to what Martin said, is internally within the supply chain businesses, then it helps us, level load the activity and give a better service out. And ultimately, it goes back to the sustainability point we were talking about earlier on. This means you can do more with less or become leaner. And that, just drives that circular piece right back to sustainability.